Welcome back. Let's take you back live to Tianjin, China, as our coverage at the World Economic Forum, so-called Summer Davos, continues, and where CNBC's Sherry Kang is very busy talking to a lot of big business leaders. Good morning.
Yep. Good morning, Marty. You said it. I mean, I am going to be very, very busy. Long days here at the World Economic Forum in Tianjin, China for sure, but fascinating conversations that I am looking forward to having. And a major, of course, a topic that I'm going to be touching on is, of course, the geopolitical complexities that the world is faced with. And not to mention, given the backdrop of Tianjin, China for this year's Summer Davos, I'm going to be talking about, of course, what's happening with the U.S.-China trade relations and negotiations, and what does it mean for the rest of the world, ex-G2, and we have a perfect guest for, of course, to kick us off. And this morning we've got Joe Ngai, chairman of China, of course, of McKinsey. Joe, it's great to have you on. How are you doing this morning?
I'm good. It's hot here. It's good.
It is very hot here. In fact, I arrived on the hottest day of the year in Tianjin. So there we go. And what is also hot is this level of a geopolitical uncertainty that we're living with. And I just want to get your quick reaction to what happened with the Iran situation. And what did you make of it? Because it could have been a major complication geopolitically and economically for China.
Well, you know, in the last couple of years here in China, when I talk to a lot of CEOs and chairmen, there's been so much going on in the world in the last couple of years. But I think that, you know, in the corporates in China here, I would say that they've been very desensitized to things going on in the world. I think the domestic economy continues to chug on at a kind of moderate pace. I think that, you know, people are all conservative, but they've gotten used to this level kind of what's going on in the world. I think tariffs came by. Wars came by, and I think that people are kind of living their lives, right? So in many ways, right, when we sit here in Tianjin and the weather is so hot as it is right now, I feel like corporates in China are so used to the world going around in circles, right? But in some ways, like, they are now very resilient, right, to all these changes. So not a big yawn, but I would say that they are also not freaking out, right, as things goes on around the world today.
So they're not freaking out over the trade situation and the negotiations that it's engaged with U.S. at the moment. I mean, it was eye-watering level of tariffs that we're talking about.
It was, and you know, the most surprising thing that I found was, in many ways, many multinationals were all trying to figure out, like, what do I do with this new tariff situation and all the things going on. But Chinese companies, right, which should be at the heart of all of these, maybe because of the last couple of years of training, right, they have been, I would say, much more calm through all of these, right. Of course, there are impact. For example, there was a lot of kind of front loading in the last couple of months, right. There's a little bit of uncertainty right now. People are all delaying CapEx decisions. So, of course, it's all there, yeah. But in many ways, I think people are so used to a world that's going to be a lot more volatile. So in many ways, I would say that, you know, they look at this and say that, well, that has been going on for the last several years already. So what's new?
Okay. So what is your advice at the moment? Is just sit tight after some front loading, see how the negotiation is playing out?
I think sitting tight is not a viable strategy in China. I think that there are so many changes in competition. So I would say that in the last few years, I've seen Chinese companies actually diversifying quite a lot. In many ways, Chinese companies kind of trying to figure out in the global world, like, where else are good markets for them. I think has been an ongoing trend. Yeah. I would say since probably 4 or 5 years ago. So if you look at the trade corridors right now, right, the fastest growing ones, China, ASEAN, China, LATAM, China, Middle East, right, China, Africa. I would say that the trade routes, right, and what I would say these trade corridors have been growing actually already, and that's been a 3, 4, 5 year trend.
Okay. How much of your conversation with your clients is about AI? I wonder if AI is a layer that can actually somehow offset some of the damages that could be inflicted because of a geopolitical uncertainty.
I think AI is definitely a topic that since the whole DeepSeek phenomenon a few months ago, I think that has actually captured a lot of imagination of corporates. I would say that right now it enters into boardrooms, it definitely enters the management meetings, but like everywhere around the world, I think there are many experiments of AI, But in terms of AI resulting in, I would say, complete business model changes, or I would say bottom line impact, I think it's still early.
Okay.
But I would actually bet that Chinese companies will be one of the few places where AI will run quite quickly, because right now, if I look at any one of my clients, I would say that it is definitely a part of the agenda. Now everyone's trying to figure out, okay, is this for real? Like, how much can I get out of it?
Commercially disruptive.
Exactly, right.
Yeah.
But I think that in many cases, right. Recently, I was at a client that basically they think about sales and trading, and I think that they truly believe that AI will definitely help in terms of customer service. They'll help a lot. And remember, China was actually at the forefront of the mobile revolution, the digital revolution. So I think this time they feel like AI will definitely power a little bit of the next generation. But how and what format and when does it actually hit the bottom line? I think like everyone else in the world, that's still to be seen.
So I brought in AI in all this because China is trying to move up the value chain, and DeepSeek is really the headline-grabbing moment that probably got the attention of the Trump administration as well. And I wonder, how do we get settled in this chapter of trade negotiations when Washington is pushing back? Beijing is not going to give up on that initiative. So what happens there? How do we settle?
I think it's not only AI, right? If you think about moving up the value chain, if you look at the last few years, I think in advanced manufacturing, I think in consumer electronics, I think in things like biotech. Recently, there's been a lot of development over there. I think in robotics, there's been exciting things happening in robotics in China right now. You've seen recently a lot of advancements, right, around how I would say that robots are really moving into the mainstream of China is probably like the largest manufacturer and usage of robots today. So I would say that in all these areas, not only AI, I think there actually has been a lot of work done in the past few years. So I think that all features in what we're discussing right now, because every country in the industrial policy, not only the US, everywhere else around the world, are all thinking around these areas. That in some ways, China has been investing and developing right in the last several years. We recently did a research around kind of the 20 areas in the world where we call the competition, arena competition, and you will find that actually China is quite well positioned in many of these. But the question is going to be in this competition, collaboration world, right? How is that going to play out? And I think that's where I think the discussions are being held right now.
So how are you envisioning the relationship between the G2 and how China is trying to go for a more value-add services, innovation-oriented economy when Washington is clearly not happy with that? How do you tell your clients, CEOs, business leaders out there to position around that? Keep going with the self-sufficiency drive in China? And is that what's happening?
Well, China is a very big domestic economy, right? We are, 18% of global GDP, right? So this year, even the GDP growth in China is a third of global growth. So in many ways, the percentage of kind of global business for most Chinese businesses is actually quite low relative to many countries out there. So I would say that moving up the value chain, trying to go into more advanced, whether it's manufacturing, whether it's services, I think actually has been the ongoing story. I would say that the kind of low-cost China manufacturer, right, that does, shirts or whatever, that's really a story of the past. That has all been moved out. I think in the last few years, actually it's a 10-year story. I think China is making phones, cars, and machinery and all that. So I do think that moving up the value chain is just something that happens as you grow into a more kind of mid-income market range. I think that geopolitics have been more complicated. I think that like all countries around the world, I think that we all have kind of figure out how do we play in there. For individual companies, this is where I work in. I think that sensitivity, right, has been heightened, right? We call it like a little bit the how do you become a global citizen, a global corporate citizen, right? So you got to be more sharing, you got to do more joint ventures, you got to do more collaboration. I think all those are things where Chinese companies need to learn, right, in the upcoming decade.
And do you think the Chinese companies and CEOs, they're ready for the future entrepreneurship? Because I really loved what your team and you put together in terms of some of the traits that CEOs today need, including continuous learning, which is my favorite, by the way. Just give us a line for our viewers, the CEO viewers out there. Continuous learning, Because I feel like today we live in a world where we need to learn new things, but unlearn some of the old stuff and relearn some of the new stuff.
I think that's absolutely right. So recently what I've been championing a little bit is that China's companies, we were the factory for the world. I think we got to become corporate citizens of the world. And I think that how to become a true corporate citizen of the world, right? We got to contribute to employment in other places. We got to contribute to industrial policies of other countries around the world. We got to figure out, how to, becoming a more collaborative partner in many places. I think that's the learning. And then I think for most Chinese companies, and I'll give you one small anecdote. For the longest time, we focused on our factories. We made the best good, the most value for money, and then we thought that the world would just take it from us. I think these days we're going to think a lot more around, how does other people think about it? Like, how do we feature in their agenda, and how do we then become someone that actually adds value to them as well, not only providing them with goods only. That's the learning that we need.
And that model actually worked for a while, but totally got trumped with this new administration in the U.S. as well. Joe, it's great to have you on. Thank you so much for your time this morning. That was Joe Ngai from McKinsey. Marty, it's back to you.
All right, great conversation. Thank you, Sherry Kang, there at the World Economic Forum, so-called Summer Davos.
Just to set up here, Hong Kong IPO market has been having a moment in 2025. I mean, I'm hearing breaking news, everyone. I hear 190 companies or so in the pipeline to list in Hong Kong exchanges. So I think that is quite something. I think it was it garnered a lot of attention because of CATL's a mega pivot to support the financial markets. DeepSeek is one layer of that. And a lot of investors really rethinking their investments in China and the United States as well. And we've got a perfect guest joining us live this morning from Summer Davos. It is Chui, head of Global Issuer Services at Hong Kong Exchange. Johnson, it's great to have you on. Great to see you in Tianjin here. So, like I said, Hong Kong IPO market is having a moment. What do you think is the main driver of that? I mean, I did try to sort of have a quick summary of that. Do you think it's all of the above? What is the key driver?
Yeah, no, thank you. Good morning, and thank you for having me. It's all of the above. You summarized it perfectly. But, just to reiterate some of the points that you mentioned, obviously a lot more investor interest globally coming into the Hong Kong market. The market, we've enjoyed a very high level of liquidity. We're trading at, roughly about 240 billion Hong Kong dollars daily turnover year to date. And as that trickles down to the whole IPO and fundraising market, we've absolutely enjoyed a lot of momentum. So currently, as it stands, we are the #1 IPO exchange globally year to date. Over $12 billion of capital has been raised in IPOs. As you mentioned, we've successfully enjoyed the largest IPO fundraising globally year to date, $5.3 billion of CATL. But as we think about the key thematics, there's a lot of breadth and support of the IPO market. So in addition to being the #1 fundraising market globally, number two, we've also seen quite a breadth of companies from different sectors listing. The key sectors include consumer retail, technology, TMT, healthcare, and also new energy. And obviously, it's very topical for today at Summer Davos, new champions. And we really think that the Hong Kong Exchange and IPOs, etc., we very much serve a capital markets platform to allow these new champions to become public, to tap the capital markets, and to basically continue to grow their businesses.
Give us some color and sort of real color on the conversations that you're having with the companies that are thinking about, that are interested in listing in Hong Kong. What are they looking for, and what are they trying to avoid?
Yeah, so I mean, some of the common things that they're looking for. #1, obviously Hong Kong, we are historically, and we're one of the most international finance centers globally. So by virtue of listing in Hong Kong, you tap into a very broad investor base. So all investors, it's #1. Number two, we are one of the most liquid markets globally. So by virtue of listing in Hong Kong, you have the benefit of enjoying strong liquidity. But importantly, Hong Kong, we are the super connector, and so where we see a lot of the mainland Chinese companies coming to list in Hong Kong, Hong Kong offers a very good platform for these companies to, in addition tapping international capital, to really grow their business internationally. And the reverse we're also seeing as well. Increasingly, we're seeing more international companies showing interest, and there's some increasing number of companies listing in Hong Kong to tap our market and also to access China.
Do you think it's some sort of a hedge? Maybe companies thinking, okay, yuan is going to go down, or Chinese stock market is not really giving me the liquidity or the valuation or the geopolitical safety that I need for my company's listing, and I look at Hong Kong and that looks favorable. Or they're rethinking the U.S. investments sitting in the U.S. and given the geopolitical complexities, that maybe Hong Kong is a sort of safer ground. Do you think that's part of the thinking too?
Yeah, I mean, I guess we always think about Hong Kong, what we can offer. What is HKEX's value proposition for issuers listing on our market? Now, obviously, for an issuer to choose listing venue to list in Hong Kong, there's all the factors that, some factors that you mentioned, but a lot of factors which are personal to the companies themselves on what is the right listing venue as a capital markets to help them to grow their business. So for example, if they list in Hong Kong, grow their international businesses, Hong Kong being an international exchange, it allows these companies to easier to discuss business with potential international partners. It allows them, potentially to offer, Hong Kong listed stock as compensation for their international employees, and potential M&A inorganic growth opportunities. That's the value proposition that Hong Kong offers to a lot of these companies.
I was reading about, since 2019, over 80 Chinese companies have delisted from U.S. exchanges. How much of them are you absorbing? And that pipeline number, I mean, 190 companies that are looking to list in Hong Kong, how many of them are Chinese companies?
Yeah, so if you're looking at like Chinese companies that previously had initially listed in US and doing a dual listing in Hong Kong, it's actually a very well-trodden path. So in 2019, Alibaba was the first US-listed Chinese company to come back to list in Hong Kong. And after that, over the course of the past 5-6 years, over 30 companies are dual-listed have come back to list in Hong Kong, whether it's in form of a dual primary or a secondary listing. So it's a well-trodden path. We have very clear listing requirements and rules that facilitate these companies coming back for a dual listing. And again, when you see these companies after they've come back to list in Hong Kong, they themselves have also gained a lot of both capital markets and I guess just personal business benefits. Again, increasing shareholder base and also liquidity.
Do you think a lot of Chinese companies listing in Hong Kong, is that a good headline for Hong Kong Exchange, or do you think that could somehow risk or dilute your global appeal and the diversification story that you're pitching to companies that are looking to list?
Yeah, it enhances, but I'll answer your question in two components. There's the Chinese companies listing in Hong Kong, but also I'll share a bit more about international companies coming to list in Hong Kong. So Chinese companies, absolutely, the majority of the companies listed on our exchange, they are companies from China. We are the super connector of China to the rest of the world and vice versa. But you see, what's interesting is with the recent batch of Chinese companies listing in Hong Kong, a lot of these companies are tapping the Hong Kong market to grow internationally. So for the Chinese companies that listed in Hong Kong last year, over a quarter of those companies actually had international operations. On the reverse, on the international company side, we're seeing increasing interest. So over the course of the past year or so, particularly on the Southeast Asia side, we've seen companies from the e-commerce sector, from the biotech sector, even from the commodity sector that has chosen to list in Hong Kong, and they've done quite well. As we currently speak, there is a Thai consumer retail company that's book building and accepting orders. So that's one layer. I think the second layer is we also feel that we need to continue to progress our effort in our international strategy and to attract more international companies to list in Hong Kong. And on this front, a few things that we've recently done. We've recognized Thailand, Abu Dhabi, and Dubai recently as we call RSEs, recognized stock exchanges, to do a dual secondary listing in Hong Kong. We will be opening our first rep office in the Middle East, in Riyadh, later this year. So we are also proactively continuing our international expansion journey.
Some have pointed out that mainland Chinese exchanges sort of keeping things tight when it comes to IPOs because they wanted to stabilize the market. Do you see that story coming back and maybe tilting things the other way around and sort of work in a not so favorable manner for Hong Kong Exchange? Do you see that happening as well in the near future?
Yeah, see, in our view, the Hong Kong Exchange and the mainland exchanges, we're partners. We're very complementary. We offer a different value proposition. So to this front, there's actually historically, for the past 20 years, a number of dual A-share and H-share listed companies, roughly about 150 of them. And obviously, the deals that grabbed the headlines, the CATL was an initial A-share company listing on the Hong Kong market. And currently, as we speak, there's almost 50 A-share companies that have publicly filed or publicly announced their intention to list in Hong Kong. So it's very much complementary, and it's a partnership.
Talk to me about the valuation gap between China and Hong Kong. It goes back to the tax-related regime that it's still in place. Do you think it can change? Do you think the gap can narrow? Are you talking to mainland, I don't know, bourse operators as well?
Yeah. I guess ultimately we continue to focus on what the Hong Kong market can offer. The market dynamics of the mainland Chinese bourses and the Hong Kong Stock Exchange, we have a slightly different structure. But I think again, what Hong Kong offers is by virtue of listing in Hong Kong, our companies access all the international investors globally. So in terms of the valuations, the investment judgments, it's very much driven by the international investor community.
All right.
Yeah.
I get one more question here. I'm going to get cheeky. Is Shein coming to Hong Kong and listing?
Unfortunately, I can't answer company-specific questions.
Okay, so I don't get to break two stories with this interview, but fine, I will take that. But do give us an update later on in the future when you actually do have an answer for us. Johnson, it's great to have you, and great to see you in Tianjin as well. That was Johnson.